Hi, welcome to the Market Alert for Wednesday the 21st of June, the longest day 2017. So yesterday we saw the pound move lower, and this was a result of a comment by none other than Barmy Carney. He said yesterday that there was no need to raise rates for the time being. Well, this is Carney doing what he does best, and that's backtracking as usual. What was interesting, now he's the only first central banker to actually say this, is in a gloomy assessment of the state of the world economy, and a very interesting assessment and opinion coming from a central banker, one who's actually maybe slightly in the real world, where things are starting to look slightly precarious, to say the least. And also he talks about oil prices, and here you can see that oil prices dropped sharply yesterday, which is ties in with the the squeeze in the Dow, which you'll see in just a moment. So the pound lower, and then I got bored watching and waiting for it. And we did have signals. I'm just going to switch to this chart here. You can see that we had another short here, well, three shorts following his statement after a bit of a rally, and the market then moving lower. The problem is, when we got the signal and the entry price, we had the 3 bars, and then the price wasn't filled within the 3 bars before moving low, which is a shame really, because that would have been a nice trade to the downside there. So market extremely quiet, and then it was sort of dropping down in sort of every hour it would move and then do nothing. So very strange price action there. And then over to the Dow. This is the pre-market session. So the market trading sideways, and as I warned yesterday morning, Tuesdays can be very difficult because the market's already digesting what's happened over the weekend in Monday's session. So the market started off, it attempted to move higher, but we'd had a 144 point rise the day before. All was looking well, and then the market just traded sideways, as you can see there. Market took in the entry price and then just traded sideways, and you'll see the market, you know, by this point here you can see that we've got, whoops, wrong one, just do that again. You can see the market's already in a range, apart from the little spike up that we had just here. The market then becomes range bound, and there's a clue that this market isn't going to do a lot. The market comes back towards the entry price, giving you the opportunity to at least cut the losses, because the market isn't doing anything. Then it goes sideways again, and then a bit lower. Then we go into the quieter part of the session, and then as we go forward, I'm just going to bring this back a bit, we see the market move sharply lower, and there you'll see the price is being brought back. This is the crucial level, and immediately they bring the market back. Just look at the volume as prices are being held there. The market again comes off the lows, which you can see there, big spike in volume. And then of course we get the usual thing where the market is brought back, because, as I keep saying, they don't want it lower. They want the market to remain on the highs. And once again, and as I said in the market alert yesterday about if you get a trade in the first part of the session, that's fine, but it's Tuesday. Market can be very quiet, which it was. I mean, you have to look at the range, it's tiny, and then the market sideways again. So we know we're onto a hiding to nothing at this point, and the market comes back through and then back again, then puts in a buy. And like I said yesterday, you're playing with fire when the market is as quiet as it was, and again given that it was Tuesday. Well, let's just have a look at where the market's trading on the overnight. You can see it's sideways in a range there. Let's just have a look at yesterday's range. Signals are slightly different on the reloaded chart with the historical data, but up until the market actually broke here, the total range was a meager 43 points. That's how quiet it was, and you need more than that to move prices to the scalp. Let's have a look at the daily chart. We can see the market coming off the highs. There was no real selling around. It was just that the drop in oil, the oil price moving prices to the downside there, and then of course bringing it back. Today all we've got for the Dow is crude oil inventories is the main event at 3:30. Existing home sales out as well. Haldane is speaking at 12 p.m. as well. And then for the pound this morning, we've got public sector borrowing there. That's the only thing we've got out for the pound. And speaking of the pound, let's just have a look at the bigger picture in the pound so that we can see where we are. Here we've got prices coming back to the 76% and also the 126 area as well. So a bit of support coming in at this level. If the market continues lower, this is where it's going to 125.27. And then finally, let's have a look at the implied volatility. As you'd expect, this actually picked up yesterday. We had the record low of 774, but the drop in the oil price and the spike to the downside back up to 855, and I think personally this is going to be the low for this market. I don't see this being broken now as far as the implied is concerned. There's too much starting to unravel in the background. If you have a look and do the research, things are starting to fall apart behind the scenes. Interesting again that Carney couldn't see a reason to actually increase interest rates when he said last year that he expected to. But that's Carney for you, and the rest of the central bankers who haven't got a clue what's actually going on, apart from him creating and inflating asset bubbles all over the place. Right, well, that said, I will call it a day here, reporting if there's anything happening. We should see a bit more activity today in the first half of the Dow. Pound fairly quiet at the moment. I may probably trade sideways, digesting yesterday's move, so be warned on that one. But the Dow we should see a bit more, and then 3:30 we've got the crude oil figures, which are going to be interesting as well, because obviously the drop in crude yesterday, they need to do something to bring this back. The drop in crude oil prices shows a lack of demand globally, which means there's a slowdown and recession coming, if not worse, as we've spoken of many times before. And also the implied volatility is indicating the coming massive correction in these markets as well. Bubbles always burst. It's as simple as that, and it's just a matter of how long the central banks want to intervene to keep these bubbles and illusion alive. Right, that's it. So thanks for watching. See you in the next one.